Okay, so let's see what happened here this week. This is the week of, let's see, 21st of May 2018. Monday was the 21st. Now, Monday we gapped up. This is called a gap up, and typically there is a trade for it to come and gap back down. Some people, there's different ways of trading to close the gap. So some people do it. They go by this first candle. Some people go by a range of candles. Some people wait for an indication like this, but it is a gap up nonetheless, and essentially, eventually, this is going to get filled here. Not sure if it got filled this week because I didn't look at the charts. I'm just doing this kind of live over here. So as you can see, we opened up with a gap up, a good candle, but as always, they came in here, they made it appear as if it was going to go up, and so and they brought it back down, and then they made it appear as if it was going to close the gap, and it just kind of consolidated here in the same area. This can be a killer for some traders. Be careful trading anything like this kind of market, because this is how they grind you out of the markets over here. As you can see, it didn't even touch the 50-day moving average over here, and it didn't go to the 200 days. Some people trade towards the 200-day moving average. It didn't touch that. It kind of just grinded up and down. So hindsight is 2020. Let's do some trend lines here. This looks all out of whack, but if you do some trend lines, you can kind of get a better grasp of what happened here, and you can kind of see if you drew this trend line around this time frame, you can probably could have taken advantage of here, of this rest of the day over here. But tough day to trade because this is the open candle, and it kind of just ranged for the rest of the day here. Let me remove this, and I'm going to remove these in order to go to the next day, which was Tuesday. Tuesday we gapped up slightly as well, and Tuesday was a little different because we closed the gap on Tuesday, and we continued going down. So we gapped up over here, and then we kind of went, it was the indicator it was going to go up, and then we got this big candle with high volume here. Typically this is a bear trap. This can be a bear trap, but it was not, and you can tell because for it to be a bear trap, it has to kind of go higher and close a little higher than the 50% line over here. And this candle took it right back down, and down we go, and it trended. It just consolidated here, we closed the gap right here. This candle, as you can see, this is a nice gap trade. This candle closed the gap over here, and then of course a bunch of buys. Once you close the gap, people, they put their buy orders here, they made some money here, and then we moved down over here, and they took it down. And let's draw some trend lines over here. So this was the high point of the day, and if you had this trend line here, and then let's do another trend line over here. This was kind of the low of the day, and there you have it. And these are little tricks over here. This is to make people think that we broke through the trend line and we're going to continue going up. But if you see the next candle red, or a candle close below this trend line, it's time to go. Don't worry about the wicks. These wicks are just them taking your stops and and taking your money essentially. But look at this candle. A lot of people had it. A lot of people apparently knew that this was gonna just break this trend over here, and down we go, and we ended over here. But see how organized it looks in hindsight. When you draw these trend lines, it's beautiful, isn't it? And then we move on to Wednesday. It's not the same when you're trading live. It sure does not look the same when you're trading live, because you're looking towards the right, and it hasn't happened yet. So here we go to this one. We gap down again, and then we up we go, and we close the gap, kind of close the gap over here, and up we go. And this one, I have to tell you, I was caught in this little in this little consolidation area here, and I must say I took some bad trades, and I'm not always right. No one is, but thankfully I was able to come back and eliminate some of these losses that I took over here in this area here. So we gap down, we go up. Everyone thinks it's gonna go up. Is at least this is the by the way, the 13-day moving average. This is the 50. This is a 200. So it goes up. Yes, we're gonna go and we're gonna not only are we gonna close the gap, but we're gonna go and hit the 50-day moving average, and down we go again. And this took out the lows of the day. So here, when you're seeing this candle forming, you're thinking down we go, right? But no, they took it back up, and then they took it back down, and this area here was bad for me because I said, wow, you know, we're trending down. We have this nice candle here. It doesn't look like a bear trap. You know, this is great. We're probably gonna go. I probably had a Fib set up, a Fibonacci line set up, or I had an Andrews pitchfork set up from the prior day. I forgot what I had, but I thought it was gonna go down, and up we go. I got out here, and then down we go again. I said, yes, finally we're gonna go down, and up we go again. And look how crazy this looks over here, right? So if you had drawn a trend line here, you know, you're thinking we broke through the trend. You drew a trend line here, like right here, and it's a little better, right? We broke through this trend. So I would say a trend line for me has to touch a couple points, so it for me to really trust the confirmation here. So I guess this is the best trend line here that I can draw for a period. Let's draw a trend line over here. You know, it has to touch at least two or three additional points. And there you go. We broke through the trend. It closed slightly higher here. What saved me is that I got in over here around this area here, because I said, wait a minute, we're making all these bottoms and we're still not going down. We're making all these stops. Something has to happen here. Something has to happen. And a lot of times it goes and touches a 200-day moving average. It says hi to it. So I said, okay, this thing is either going to crash or it's going to go the other way. I had some indicators set up. I don't use, as you can see, I don't use too many indicators. I'm working on a couple of indicators right now, and they were giving me positive signals around this area here. So I said, okay, it can either go all the way up to the 200-day moving average, or I mean, just crash down to wherever I had my next goal set up. So because my indicator said it's going to go up, there's a good chance it's going to go up, I took the chance of it going up. My stop loss was not a lot, because by this time I had already lost a lot. And this is the trade that eliminated most of my losses for that day. So that's what happened on this day. And we went up here and we never came back down. And let me delete these. But just, and look what happened. We touched the 200-day moving average line, and it just danced around the 200-day moving average line. And we moved to May 24th, which was Thursday. And it wasn't much of a gap, but we closed the gap. This is closing the gap over here. That was a quick money trade over here. It was a nice, you know, boom, 29.50. It was 1 point. Then we went down, and we went all the way down, and you know, not much indication here. Let me fix this over here. Not much indication that it was gonna trend back up here. Just that we got overextended from 200-day moving average line. The ES likes dancing around the 200-day moving average. It likes the 50, the 200, the 13. That's why I keep these up here. A little trick I learned on Wall Street. So we go down here, and then we go back up, touch the 200-day moving average line, and you know, everyone thinks, oh, it's time to rock it up. But no, it stays here. It stays within this area. Let's draw some trend lines over here. Everything, of course, is beautiful in hindsight. And this is what the market did. This is the trend line that I would draw. Actually, I'll pick it up a little bit because I like to touch the tops of these candles here. So there it is, and let's draw one up from the bottom up. I mean, see, not really, not really any good over here. It doesn't really do any good over here. So kind of just went up. But overall, okay, what is the trend? This is a question for you. What is the trend over here? What is the trend? Up, down, or sideways? Quick question. And the answer is sideways. We did not move. Okay, so this is the open and this is the close. I mean, look at this. We didn't go anywhere. We moved sideways. And this sideways movement here is what you try to avoid as a trader. That's why one of my main indicators is a trend indicator. The market needs to give me a sign of a trend in order for me to trade. Otherwise, I stay away as much as I can because that sideways movement is a killer for traders. And then we move on to Friday. Friday was a great day. I had these trend lines here because I made a video earlier, and of course the computer, it wasn't my friend today. Now this is wrong here. Don't pay attention to this, and I'll explain to you what happened shortly. So we gapped down here. We started at a low. I was going to take this trade here because I thought it was going to go down. This is a beautiful candle here. It looks like the price got rejected up here in these levels. So I said, okay, if they rejected the price here, we're going to probably go down. Now, this is a 935 candle. Only the pros trade around this time. This is when the pros make their money, from 9:30 to 9:45. So I stay away from this area. I consider myself a professional, of course, but I don't yet have a system for trading this 930 candle over here. And as you can see, I was going to lose because I went here. I said, okay, so we gapped down and we're going to go down. I saw this red candle here, but then this candle comes and says otherwise. Says, wait a minute, the sellers are not very strong. We may take this thing back up. So this is uncertainty for me. This I stay away from. I stay away from this because this is a 50-50 over here, and I like my trades to have a larger chance than 50-50. So here we go. Here's another candle. Here's another positive candle, and up we go here, and up we go through the 200-day moving average line, and we made the highs over here. We closed the gap on this candle here. We closed the gap, and down we go, and up we go, and and this is where it kind of consolidated. This is where the market consolidated. Now this is also sideways here. We're not going up or down. We're just going down and then up, and see the close is right there near the open. The close is actually the same as the open. Wow, amazing. Look at this. We didn't move anywhere. But I made a couple of really good trades over here towards the end of the day. Around this area, around this period, my computer froze on me. The screen went white and it did not work. I was in a trade. I have NinjaTrader set up, so it leaves the trade working even though I'm disconnected. That's one of the settings you can do in NinjaTrader. And eventually I said, okay, it was over here around 3:05, around here, that I got a signal that it was going to go up. Three really good signals that we were going to head up over here, and we were just hitting the bottom. I use divergence. Divergence is one of my main indicators. Trend is one of my main indicators, but divergence works even better than trend, especially during this week where we did not really have any trends. Again, this looks really beautiful over here. This is wonderful because the day is over, right? Now we can draw all the trend lines we want. And during the day you can draw these and kind of gauge, but these trend lines break all the time. There's not an exact science, and sometimes it doesn't touch the trend line. So this was a positive day. This made me even for the week. Could have been much worse, and could have been much better if my computer wouldn't have gone blank over here. I eventually called NinjaTrader. They have a trade desk, and they got me out of the trade around somewhere around here. Now, when I got out of the trade, what this is me. I never trade after 3:45, so you know that this is not normal for me. And also, I have it set where it takes me out of any position I have at 3:55 p.m. This is for the pros. This is for the pros. You have to kind of be on Wall Street and feel the energy, feel what's going on and what they're trying to do before you can try to trade this. I mean, I wouldn't I wouldn't go in these areas. I like easy trades. I like quick profits, easy in and out, and that's how I trade, easy. So this is what we had. The market didn't really move anywhere this week. It was really choppy. I didn't have any trend signals from my trend strategies, and this is where we went, and that's the week in review. And I hope you enjoy.